Good morning, traders. Welcome to the morning update from Phoenix Blue. It's Tuesday, the 9th of February, and what another interesting day in the markets we had yesterday. Again, it didn't work out too favorably for us. We did take a hit on dollar yen. This was a very reduced risk trade. However, we do have it covered on the flip side because yesterday was for sure a risk off day. We saw massive buying of Japanese yen across the board. We also saw good moves in gold. And on the flip side, we also saw selling of equities. Now, what we did notice yesterday was a major support level get broken on dollar yen. This didn't happen though on the equities, so I'm wondering if we're going to see a rebound in dollar yen, but we'll look at the charts in a minute. It was a pretty quiet day on news, and in terms of news today, again, it's very, very boring on the major news front. We've got something from the Swiss government coming out, the unemployment rate, which was expected at 3.4%, and it's stayed at 3.4%. So in terms of major news, that's it for today. We're probably going to see it a little bit quiet, I would have anticipated, due to Miss Yellen speaking tomorrow, where we're probably going to see more fireworks. Has the market lost faith in the Fed? Will they, won't they, talk about raising rates? How excited or disappointed is she going to be at the jobs numbers, but yet look at the positive side, which was the reduction in unemployment and the increase in hourly earnings. All this we've yet to see. Now, if I'm being brutally honest, after January, I am a little bit disappointed with the way February started. But look, this is part and parcel of trading. Yeah, we're going to have good days, we're going to have really good days, we're going to have some bad days, and we're going to have some bad months. But what we have to look at is, did we stick to our game plan? Were we disciplined? Did we stick to the rules? Okay. Now, how many of you have got a trading plan? If you don't have a trading plan, then let me just tell you one thing: give up trading now until you do. Okay, this is a business, you have to take it seriously, and if you want to come out on the other side reaping the rewards, then you have to be prepared. Okay, that's the reason why I'm coming into the office 7 days a week. Monday to Friday I'm doing my trading. If there's opportunities, I'm working with clients, and then at the weekend I'm getting prepared for the week ahead. Okay, I'm not in all weekend, but I'm making sure I'm aware of what opportunities lie there. And being prepared doesn't mean you're going to succeed. Okay, it's just putting a process in place. If you put a process in place, the prize will follow. Okay, guys. So look, let's have a look what happened throughout Asia last night. Now, remember, it's Chinese New Year, so there's nothing happening on the yuan, and there's nothing happening with the Shanghai Composite. But look, huge sell-off in the Nikkei, which correlates with what happened in the yen. Here was our significant support level. We got a break and close below the previous couple of weeks. We then got a surge, closed back above. We then got a gap down followed by a gap up and a bullish close. Then the Bank of Japan stepped in with negative rates, and the Nikkei shot up. Now, how would you be feeling if you were Mr. Kuroda, the governor of the Bank of Japan? Negative interest rates, you're getting the kind of reaction that you want, only to see 1, 2, 3, 4, 5, 6, 7 days later, after you've made the announcement, the Nikkei has gone from 17,500 all the way down to 16,000. Yeah, it's basically what's that? A 10% drop. That's a significant drop. Significant drop. So we've got to see what's going to happen here and see how this market's going to play out. So this, in terms of a short-term area to be looking for a bounce, it's going to be interesting. See if we're going to form a double bottom, because this is where the market created its bounce last time, and we've pretty much moved in a very, very similar manner down to it this time. Now, let's just flip across. So this is a selling of the Nikkei. We're going to move over to crude oil. Now, you'd usually anticipate when the big sell-off in stocks that we're seeing a big sell-off in crude. Well, yesterday, or I should say over the last week or so, it's not really been a big sell-off. Okay, we're still hovering around the 30, just over $30 a barrel. We can see this sort of wedge forming, falling wedge, which is in place with a nice anchor here. We've got one, two, three, four touches. So the question is, I'd envisage guesstimate that we're going to come and somewhat touch this $25, $26 barrel price again. But I think what I'll be particularly waiting for is maybe a rally back up to here, somewhere in this, where are we? Somewhere in this region here, okay? So we'll be looking, what's that, around 34 to $33 coming off the upper trend line here. This is the weekly chart, so that's where I'm going to be looking. Okay, somewhere in here. Here's my little arrow tool. Sorry about that. So that's what we'll be looking for, somewhere into here, and then the same move back down again, testing the lows at least. So that's what I'll be looking for on crude. It may just fall off a cliff here, but I think this is what I'm going to look for. So that will probably mean if we do get this, we're going to see a bullish move in Canadian dollar. So we'll probably see CAD maybe test 137s again, 138s. Now, we're looking at gold. Now, why are we going to look at gold? This is because this is a safe haven asset as well, same as the Japanese yen. I've highlighted our initial entry at 1075 and our stops at 1060. Now, you can see that by looking at this, we took most of our money off yesterday at $1,200. We do have additional targets of $1,250. But if you look here, guys, we've got a risk-reward ratio that's 8.81 to 1. So for every $1,000 you risked in the market, you're getting back just under $9,000. You've nearly done a good investor's year's trading off one trade there. And that's the kind of move we'll look for. Yes, we do look for other moves as well, but this shorter term period moves. But we've been in this trade a good few weeks now, and it's paid off handsomely. So that's really, really nice. So we did try and get into this a couple more times, but without any joy. We are looking for it to come back down, potentially at 1150, somewhere in this region here. So I'll just mark that off. We'll be looking for markets to retest that area before potentially looking at longs again. And then we will look for the 1250 area initially to get extended targets, because we do see this as a bullish year for gold with a fall in equities. Next one we're looking at, okay, so again this is sugar. I've been talking about sugar for a long time now. We've been in sugar since what's that? The 12th, no, I think we got triggered here. This one here, 10th of December, we've been triggered into sugar. Now, this was pretty much our entry at 1480, and our stops went above the highs 1580. Now, you can see if we do hit our target all the way down here, that's a risk-reward ratio of 3.87. Okay. Now, what we're looking at doing, you're probably thinking, oh, well, that's not fantastic. Well, listen, any positive reward risk ratio is fantastic. If you can trade at 3 to 1 and hit 3 to 1, you only need to be right 30% of the time to make money. Now, I'm pretty sure most of you out there can be right 30% of the time. Okay, but in order to make money, if you've got a strategy that's only paying you inverse risk reward, so for every $1,000 you make $400, you're going to have to be right 85, 90% of the time to make money. Now that's difficult. That's really difficult to be right that amount of time. So always think about trading positive reward to risk. So here we are. This was our initial entry. Now our stops are way past our open price. Our stops are down here now. So our stops have locked in profit. Now you see this little green line here and this red line here. This is another opportunity to get short this market. The market's, look what it's done. It's closed below structure. It's acted like a magnet. It's come back towards structure. And we're looking at selling underneath the hanging man. Entry here, stops here. And again, if we look at this, this is a 5.19 risk to reward. Risk. So you combine the two trades, we're getting best part of 9% out of the two trades. So we've got 3.87 there and 5.19. It is 9%, just over 9%. Again, that's another year's returns in the bag from one trade. Okay, so that's sugar done, and that's potentially gold that can do you 20% in the year off being very, very selective. Okay, you can see how being selective, looking for the right moves, can pay handsomely. These are just commitment of traders reports that we're trading with, so that's fundamentals with technicals. Okay, so I've found Cocoa, guys, and here we are. So this is another trade we're looking at. So right now this is a commitment of traders extreme trade. We're looking at going long above last week's high, which is this candle here, inverted hammer, and we're looking at targeting the previous highs over here. So we'll come somewhere just below these previous highs. And again, if we look at this one, it's a risk-reward ratio of 3.21. So for every $1,000 you're risking, you're going to generate 3,200 if you're correct in your analysis. So again, it's another positive risk-reward trade. Okay, moving over to the currency market now. So we're going to look at dollar yen. So yesterday we had a significant sell-off. So if we look yesterday, so dollar yen opened the day at roughly about 116.75. Rallied up to 117.50 to then come down to 115.17, an area it's not been for, well, let's have a look. It's not been since November 14. Now what's going to be crucial here is how this weekly candle closes, because obviously the Bank of Japan stepped in and created this huge move up to 21.75, only to see it come back down, and then yesterday crashed straight through this major support level. So I think right now what we have to do is we have to sit on the side of caution, see if the buying of yen is going to continue. In which case, what we'll see, or I want to see here at Phoenix Blue, is I want to see a close below this level here on the weekly chart, which is about 1550. And then what we can look for is a daily retest of structure. So we can watch this market, see if we get a nice big close somewhere down here, and then we can watch for it to come back up and test structure to sell off, and really it's free fall down to 110s. Yeah, this is sort of the next stop. But are the Bank of Japan going to come back in? Are they going to start really utilizing the easing and selling of the yen and create a big rally in dollar yen? Who knows? So just be careful on this one for now. Dollar CAD, obviously we highlighted that we want to be looking for potential buys from this sort of trend line area in around 136s. If we do get a retest of this level, 137.50s, could be interesting. Ultimately, I want to see this correlates quite nice with what we saw on the crude oil chart. So pull back to the TL before going off. Swissy, well, I've got a buy limit in at 9,800. I'm looking for a sell-off. It comes and correlates beautifully with this structure through here, and if we go a little bit further back, you can see it through here, and then again these highs over here. So let's come back. So that's Swissy. We're looking for longs from about 98, and then we can target first targets will be somewhere in around here, 99.20s. And then next stop will be 1.01, and then going up to the 1.022 area. Now another chart that is of interest is Euro Pound. So, oh dear, sorry, English weather's getting to me. Let's have a look. So we're going to go into the monthly chart here. We've got a long-term trend line here. We can see that goes all the way back to the year 2000. Multiple tests, breakthrough, comeback, retest. And then we've got this support area that was utilized once, twice, 3 times, 4, 5, 6, then broke through and it's come back to retest. So we've got short entries in. Now, my clients have got short entries anywhere from 77.50 to 77.70, depending who is the one trying to get the best entry. All using the same methodology, but it's about putting the entry where you want to, let's say, take the risk, i.e. because we're looking for our best possible entry. So it's a great area to be getting short. Initial targets, you're going to be sort of talking the top of this red zone here, which is going to be around 75, and then we can target the lower end of this red zone at around 72s to 71.50s. Again, that's a fantastic risk reward. I mean, if we're talking here, best part of 75, 85 pips. First target 235. Second target is 530. So again, it's very, very good risk reward. Okay, guys, that is it from Phoenix Blue today and our morning update. Please, if you do have any questions re our trading and our skill sets, drop me an email at info@phoenixblue.co.uk. Follow our posts on Instagram at Phoenix Blue Trading. Stay positive, stay disciplined, and we look forward to seeing you bright and early tomorrow morning.